channel. I just want to tell you, it's always your guy, EFX-SNIPER. So today I want to show someone something, and this thing is going to help him to understand. There is a difference between knowing supply and demand and apply it in the market. If you know supply and demand, then you cannot understand the structure. The major thing that you need to know about the market is about structure. And also, another thing that you need to understand, the structure is not only, let me just draw for you guys. Structure, okay. Structure is not only about this. High, low, high, low, high, low. Structure is not only about this. And you can see sometimes people don't understand what is happening. Let's say markets make already this low, then market make a movement like this. Just an example, we come to the downside, then market fly again. So people, they don't understand what is happening on this one. So guys, sorry, 1 minute. Okay, I'm back. So people, they don't understand what is happening. Why did the market come back on this one? And while market was creating, let's say the higher high, higher low, higher high, higher low, then we break structure somewhere here, then market end up flying again. So the person does not understand what is happening in the market, what creates these things to happen. Because according to them, when they see something like this, market is respecting the order flow, market is flying, market is going to the upside. But you need to understand where is the unmitigated orders. This is why you see market can make such a movement. It's happened like every single day. But I'm not here for that. The only thing that I'm here for is to tell someone, like, even if you know the market manipulation, you know all the patterns, like any patterns, the one you know, please make it work together with your structure. Because if you don't put to structure, believe me, it's gonna be a huge problem. This is why you end up failing but having a good knowledge. But since you don't know how to apply it, then it's gonna be a big problem to you. This is gonna be just a quick video. Example on gold. You know, guys, I'm a pure gold trader. I trade gold and Nasdaq, as you can check on top of my screen. I trade Nasdaq and gold. So you find there is analysis everywhere when we go. Let's say if we go like this to gold, this is gold. You're gonna see there is analysis like everywhere. So this is what I want to show you guys. To understand what this market is doing right now, you have to move to your daily time frame. Let's say we go to daily time frame and try to get the point of what is happening in the market currently. Let me remove the drawing. Sorry. This is daily time frame. What you see on daily time frame is this daily break this high. Remember, this was the liquidity, and we had market that react to this zone somewhere here. This is where I call the movement. If you guys remember, I did explain about these things. And what was here is the one we call the fake out. This was the fake out. And if you can check the way market reacted after taking out this liquidity, because this was like a higher liquidity, a pool of liquidity, the way Michael called it, a pool of liquidity, then market ran. Here there was a nice entry that you could get, after break of structure, you could come back and take the entry. Then the things that I want to try to explain is about this area here. So if you go to another broker, then you're going to see here there is a nice liquidity area that was being created. Most special, this broker, they always have this manipulation. I don't know what is happening. And markets come and react on this one. I think this was the day of FOMC. Then market did push like this. So this is how you could see. Do you see the way I'm following my stuff? I saw market break structure. Market break structure. First, before the break of structure, we grab liquidity, the one that was here. then we break structure. You see, we break, we come and create this liquidity. Then this was our demand area. Then from here, market created the fake out again, same apply like the one that we have here. Here now, what I'm gonna say, market is trading aligned with what I'm following on the higher time frame. Even if I go to H4 and try to understand what is happening there, I'm gonna get the same thing. Do you see? I'm gonna get the same thing. We had what we call the fake out. 1, 2, and 3. Then markets come and fake out. This was the daily decision point. So when market is buying from here, then it's going to the upside. So one thing that I need to understand is, where is my new range? Where is market is trading? That is the things I need to get out. We grab liquidity and we break this area. Do you see what is happening? We break this area. This is where we are doing what? We are trading right now. So we are trading inside this range. So this is the low and this is the high, where market creates a higher high. So now from here, the only thing that I need to do right now is try to understand on this range here, where is the level of liquidity, where market is gonna come and seek for liquidity. The first things that I did was yesterday, I selected this candlestick to be the zone first, for the first time, where I'm gonna look for me to do what? For me to buy. This is what I did. Then, since I'm looking for a buy, what I have to do in the low time frame, so I have to understand what is happening in the low time frame so that I can be able to catch the best movement. I think I went to H1, I found there was a hidden base. This is why I end up refining all my zone, this one. So I found this hidden base and this decision point that was down, this candlestick. So this was my hidden base that I found there. And this is what you can see here, because I have my own analysis. Do you see? This is the hidden base. So I get the hidden base, then I end up seeding the hidden base. This hidden base is aligned with all this area here. You see, all this zone. So how do I get the entry now from here? You can see it's the same thing. Same thing. So how do I get now the entry from here? Let's say if I want to buy, what must I do for me to be able to buy from here? This is why I need to go to the low time frame. So I need to see the characteristic of how I'm taking the trade. Market has to come, run this liquidity, break structure, come back. Let's say if they're going to use a QML, or if they're going to use a decision point that maybe could be somewhere here, then fly. So since I'm buying, let's say I'm buying from here, I'm not going to look for another sell position on this position here, because I know this one is already break. First it took liquidity, it breaks structure to the upside, then market come, let's say, align with the QML for me to buy. When I'm buying, my target is for me to take out this high, because that is the external liquidity. So market has to take out that high. We come in the range, we grab all the liquidity, then we are flying to the upside. But we need to understand of what is happening here. Or what I'm gonna do next is, if I see something like this, market give me a shift and return there, so for me to be able to catch the movement and continue. This is why you see sometimes Nora do something like this. You see, I think club, we call it a club somewhere. When market break this high, it return back, so she's gonna take the entry, align with this trend line. It's called, I think, the club. That is the way she call it. So this is what you need to understand. And people, they ask me about the breaker. So when markets return back, this down now, like this going to the upside, this is what we call, sometimes we call it a breaker or we call it a mitigation block. But in supply and demand, we call it RS flip or SR flip. It's the same thing. It's just that different name from different people, the way they understand the concept and the way they want to name them after their understanding. This is one thing you need to know. Here, why market is respecting this area, this is on here. It's the same thing like I'm just explaining here. The same story, breaker, SR flip, whatever name you feel it that you're gonna call it. And why we call this one? Because it took out this liquidity to the downside. Since it took out the liquidity, it became what we call a breaker. But in supply and demand, We don't care about what it did down, but as long as there is this eye that break a structure, we understand this one become a RS flip or SR flip. Then when market trade above it and come back, so we know already this one, it become the RS flip. So it's like a swipe zone where support become a resistance or resistance become support. That is the simplest way that we can use. Then from here, what we need to understand, even if you check the way market is playing, what is happening right now? What is your range that you are trading currently? Remember, the big range is this low to this high. At the same time, market is now trying to create another range. That is because we took out this area. So we create from this high to this low. And the only thing that we're going to do again is to see, okay, is this one a liquidity that market has to target? You see, because this block, I'm not going to trade inside this block. It's either the block that I'm going to focus on is going to be this one. This is the one that I'm going to look at and try to see, okay, what is happening here? Because according to me, this is an inducement for them to come and buy from here. This is what I'm going to look. Then from here, how do you take the entry? Okay, I can go to M15 and try to understand what is happening on M15. You see what is happening on M15. If I see on M15, there is a block that was there aligned with the swap zone. Then here we have what we call this come and trade inside. So I want to try to understand how I'm going to get the entry already. By my view, I can see here there was what we call a break of structure, market break of structure. Then I need to understand if this thing is aligned with my QML for me to be able to do it, to catch the movement. I can go to M5. Now, when I go to M5, I need to apply time plus price for me to do it, to understand what is happening, what is currently happening in the market. And this is what is happening right now. I can see the way market was coming to the downside. I'm not going to explain about what happened yesterday, but I'm just explaining about what happened today. So, sorry guys, someone is calling me. So then what ended up happening is like this. Market did what? Create this low where we have liquidity. You see, where we have liquidity, market grab liquidity. Then, because this low, this high, sorry, was the one that producing this lower low. This is what you need to understand before you take a trade. So we have this one, it's a liquidity, market end up break the other one there. Market break this one. Here we have a break of structure. We have a break of structure, and this one took out liquidity. So what do you wait next? Then we see something. Okay, let us look for our Asian range, because we want to try to understand also what is going to happen on our Asian range. Market create Asian range somewhere here, because my Asian range always starts from 7 p.m. to 00. So 7. Okay, this is the one. This is the one that we have here. We have the Asian range. Then market push to the upside. Remember, this is the swap zone. Again, the same story I was explaining to you guys. This is another swap story that market reacts. I think 0.40. Yeah, this is where market reacts to come to the downside. But why market is coming to the downside? Even if you check all the price, you understand the Asian range. What is your decision point? You know, this area, it's aligned with your QML. This is your QML zone. Markets grab liquidity again to the downside. If you remove all the Asian range and other stuff, what you need to understand properly is just that market break structure, then you have your decision point. This one, they create like an inducement. Markets come and react to this one. You see, we react to this area, this block. Then this block still have more liquidity down because we are having a QML level that market did not feel when it's come back for the first time. Then this is the one that's just come back to come and fill the QML. This one, you could get a perfect entry. If you wanted for confirmation, market even come back, give you another confirmation for you to go to the upside. But what we see now people they are doing is they go to low time frame. Now they start looking for something that doesn't even make sense. Now they start looking for a QML. They're saying, okay, here there is a QML. So they're expecting market to come back and sell again from here. Do you guys believe this? You understand the full concept of where market is coming and where market is going. You know already, okay, since I have this one, then I have to look for the target where market can do what? Market can give me maybe another sell position. Here there is no a possibility of market selling again, but the only time that I see market could sell was on this zone. This is why I was waiting for market to do what? To sell on this area, and the market is doing what? Is respecting. This is what you can see on my other chart. I had this zone align with this low. You see this low, that market has to come and react from it. This is what I did. So sharp guys, I hope this is gonna make sense to someone. Enjoy.